should accounting firms approach product taxability?
Well, most accounting firms shy away from product taxability. So I think it's important that they do incorporate this into their advisory practice for sales and use tax. But most importantly, they need to know is that each product may be taxable or not taxable in a different jurisdiction, and the same product could be taxable in one jurisdiction and not in another.
And different rates.
At different rates. So it's really important for them to have a thorough understanding, a comprehensive understanding of the product library their taxpayer has, how that product library is being distributed, and the product library's footprint in the jurisdiction, so that they can give them a product taxability matrix as the deliverable for this project.
So what you're selling, how you're selling it, and where?
Correct. What you're selling, how you're selling it, and where is like the primary determinants for determining whether or not it's going to be taxable in a specific jurisdiction. And
does that apply to merchandise and services and digital goods?
That's a great question. So traditionally it's been merchandise for sure, but there's new sales tax frontiers in sales tax when it comes to software as a service, digital products, streaming services, all these different new services that are coming about where are really clearly intangible, not a product or merchandise, not something that's shipped, maybe downloaded or transmitted over the internet. And many states are now taxing that. So there's probably about 25 states that tax software as a service. They tax digital goods differently. They tax streaming services differently. Those are all part of a new sales tax frontier, as I like to use, that have to be researched and have to be understood by the taxpayer and their accountant.
And I imagine, given the way the world is, clients are coming in with more of those types of things as part of their product library, right?
For sure. I mean, there's a whole move towards service offerings and bundling of services, and sometimes it's a product and a service together. But yeah, absolutely, there's more business models that are taking advantage of the cloud.
So how can tax technology help with this?
Well, there's a lot of amazing tax technology products out there, and on the operating side of sales tax, where the business is actually conducting these transactions in real time, there's tools, but you can't set the tool up without the product taxability decision matrix. So if you don't know the correct categorization of the product's taxability in the correct jurisdiction, you won't be able to configure the technology tool, whichever tool you decide to use, that's going to make the product taxability decision at the time of invoicing. And they'll use the parameters of where's the ship to address, what's the taxing jurisdiction, what's the SKU code, and all those things have to be decided in that product taxability matrix so it can be implemented correctly and configured correctly in a tax technology system.